This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Is something brewing? Potential big deals in the beer industry may have been rebuffed, but that doesn't mean the story is over. 19 and counting. The man running General Motors' Victim Compensation Fund says the number of ignition switch-related deaths is higher than initial estimates and will go even higher. And breaking point? The author of a new report explains why the widening wealth gap is starting to take a toll on state governments. We have all that and more tonight on Nightly Business Report for Monday, September 15th. Good evening, everyone. Tyler's on assignment tonight. Big and bold, that was the buzzword on Wall Street today, on a week that's expected to end with the biggest initial public stock offering in Wall Street history, Chinese e-commerce giant Alibaba. There was a flurry of mergers and acquisitions today, the kind of Monday merger mania that investors see as a sign of confidence in the markets and the global economy. Here's a rundown of today's deal-making. Cognizant Technology, this is the healthcare company, is paying nearly $3 billion in cash for healthcare technology firm TriZetto. Another healthcare company, Danaher, is buying Swiss dental implant maker Nobel Biocare for $2 billion in cash. Microsoft is buying Mojang. The company confirmed what we reported last week. It's paying $2.5 billion for the Swedish maker of the popular video game Minecraft. And German auto parts maker ZF is buying Michigan-based rival TRW for nearly $12 billion in cash. But the biggest deals of the day, a round of possible mergers in the beer industry, did not happen. Brewing giant SAB-Miller was rejected in a takeover bid of Heineken, but only because it was reportedly defending itself against a rumored takeover attempt by Anheuser-Busch InBev, a deal that some say could potentially be worth $120 billion. And that was enough to send shares of some major beer makers higher. Molson Coors was the big winner, surging nearly 6%, Anheuser-Busch up 3%. Morgan Brennan has more on the consolidation battle that's brewing in the beer industry.
A frothy Monday for the beer business. Reports that Anheuser-Busch InBev is moving forward on its long-rumored bid for SAB-Miller were debunked, and Heineken confirmed it rejected SAB's own buyout bid. While neither seems to be moving forward, it does kick off a new wave of consolidation, something beer experts have been anticipating for years.
The global beer industry has been consolidating for about 15 years. I mean, you now have 4 global players that are half the beer business, and they're 60% of the profits. And so now you're getting into the sort of final phase where it's the dance of the elephants, where the giants have to merge with the giants.
SAB-Miller, which produces Peroni and Castle Lager, is the world's second largest brewer, behind Anheuser-Busch InBev, which makes Budweiser and Stella Artois. Heineken, with its namesake brew in Amstel, is number 3. So an SAB-Heineken merger would have created a company large enough to rival Anheuser-Busch, while an Anheuser-SAB combo would create a beer behemoth responsible for nearly 1/3 of the world's beer supply.
SAB's attempt to purchase Heineken, which was rebuffed by Heineken, is an effort for them to look at other areas of the world. It also is a way of protecting themselves from the global consolidation going on with ABI now ready. We're getting very close to looking for other additional acquisitions. Each of the biggest brewers is looking to spur global growth, expanding in emerging markets as beer sales continue to slump in developed countries. Euromonitor forecasts global beer consumption will increase 14% in the 5 years through 2017, fueled by growth in Asia-Pacific, the Middle East and Africa, and Latin America, while Western Europe sees declines and North America remains flat, despite a boom in craft brews. As the consolidation dance moves forward, there's another name to keep an eye on, Molson Coors. Analysts say it could be a takeover target or a buyer if SAB-Miller is forced to divest its stake in the two companies' Miller Coors joint venture. For Nightly Business Report, I'm Morgan Brennan.
So what does one well-known business leader think of all that deal-making activity? James Tisch, CEO of Lowe's Corporation, tells me he's open to making acquisitions, but it hasn't been easy.
It's been actually difficult to find businesses to buy. We look very carefully. We kick an awful lot of tires. We've come close on some, but just luck of the draw, we haven't completed one yet.
And we'll have more of my interview with Tish and his thoughts on everything from the Federal Reserve to the economy. That's coming up a little later in the program. Meanwhile, on Wall Street today, the major averages ended the day mixed as investors anticipate the start of the Federal Reserve's policy meeting on interest rates tomorrow. Also, a disappointing economic report today impacted investor confidence. U.S. manufacturing output fell in August for the first time in 7 months. By the closing bell, the Dow rose 44 points, but the Nasdaq tumbled almost 50 points, getting stung by a big sell-off in momentum tech stocks like Netflix, Tesla, and LinkedIn, and the S&P lost 1.5 points. Worries about Europe's struggling economy are causing growth forecasts to get slashed, even here in the U.S. The Organization for Economic Cooperation and Development, this is the OECD, cut its growth outlook for major developed economies for this year and next, and called for more stimulus measures in the Eurozone to stave off deflation. The group also lowered its prediction on U.S. economic growth this year to just over 2%. New and startling statistics about the number of people injured or killed because of defective vehicles made by General Motors. Today, Kenneth Feinberg, the lawyer hired by GM to award payments to crash victims, released his first report showing that claims and fatalities are much higher than the automaker had determined. Phil LeBeau has more.
After looking at hundreds of claims and meeting with families of those injured or killed in faulty GM vehicles, Attorney Ken Feinberg is close to awarding millions of dollars to many of the victims. So far, the fund has received 445 claim applications, including 125 on behalf of those killed in GM models. Of that, 31 have been deemed eligible for payments, including 19 involving fatalities.
Clearly, the number will go up. It's speculation as to how high it will go. But clearly, based on the number of claims that have already been found eligible and the number that are in the queue that we're looking at, the number will continue to rise.
For months, GM claimed only 13 deaths were linked to accidents involving 2.6 million cars with defective ignition switches, even as lawyers and safety advocates have warned that there were far more people killed.
GM simply was flat wrong when they tried to frame the conversation by saying there were 13 deaths. It's just factually impossible given the amount of years, actually a decade, that they covered up the fraud and the amount of accidents that we know occurred as a result of the ignition switch.
General Motors CEO Mary Barra is hoping the compensation fund will help her company clear a good chunk of the cases involving defective switches. Beyond that, she's leaving the process up to Feinberg and his team.
Since we've announced the protocol, I have not talked to Ken. He's running a completely independent process, and that's the way we want it.
Ken Feinberg expects the first claim payments to go out in the next 30 to 45 days, with many of those payments being for several $1 million. When the GM Compensation Fund stops taking applications at the end of this year, General Motors could wind up paying more than $500 million to those injured or killed in defective GM cars. Phil LeBeau, Nightly Business Report, Washington.
Detroit's bankruptcy trial resumed today after the city reached a settlement with a major creditor last week, putting the case on hold since Wednesday. So far, the cost of the historic bankruptcy has reached $126 million and counting, already surpassing the amount paid by General Motors and Chrysler at their trials. Fees to advisors have totaled $28 million, and Detroit's leading law firm has already billed the city $47 million. But many states are in a financial squeeze. According to a report released today from Standard & Poor's, income inequality is taking a toll on state governments. The widening gap between what wealthy Americans earn and people getting lower wages is reducing state revenues. Joining us now, the author of that report, Gabriel Petek. He is credit analyst at S&P Ratings. Gabe, nice to have you with us, and it's a very interesting report. Tell us why this is happening now. What happened?
Well, we think when we look at the data, what's going on is that over time, what has happened is the incomes for those at the very top of the distribution have grown very strongly, but those folks don't need to spend as large a share of their income, and so they're able to plow much of their income into savings. The bottom portion, or the remainder of the income distribution, however, has seen stagnant or even declining wages when measured in real terms. And so what it does is it has the effect of reducing overall purchasing power in the economy, which then translates directly into state budgets, and we've seen stagnating revenues for the states.
And you've been, your report covered a 30-year period. Do you see this trend continuing?
We don't see, at this present time, we don't think this trend is going away. And so this is really going to be a situation that states are going to, we believe states should be aware of as they plan and budget for upcoming years.
And on your list, the number of states that have been struggling the most with this: California. We've been hearing a lot about California financial problems for many years, but also states like Connecticut, New Jersey, and Florida. California and some of these other states solve the problem by raising income taxes. Is that really working? Is their financial situation better off?
Well, we think the states are in something of a conundrum, because when they raise tax rates on the top, like they did in California, sure, it helps speed up the rate of revenue growth, but it comes at a price, and the price is revenue stability. And so it's perhaps even harder for states to manage unpredictable and volatile revenue streams more than just a gradual slowdown in the rate of revenue collection.
So you are in the credit ratings business. When you look at states with these financial problems, are their credit ratings coming down? Are you downgrading them? And what does that mean for their economic health?
Well, the way I would say it is that I think that this issue is probably largely already reflected in the state credit ratings. We did lower the state of New Jersey's bond rating last week. California is at a low level. And we think some of this is a reflection of the issue that we're talking about here.
All right. Very interesting information. Thanks a lot, Gabe.
Thank you, Susie.
Gabe Pettick with S&P Credit Ratings. And still ahead on the program, investors are focused on the Fed. So are executives in the C-suite. And you might be surprised by what CEO James Tisch wants the central bank to do. More now on Alibaba, this week's huge initial public stock offering. Investor demand for a piece of the Chinese online retailer has been so great, executives are raising the IPO's price range from a range of $60 to $66 a share to a new range of $66 to $68 a share. But according to a filing, the company will not increase the number of shares it plans to sell. Apple's iPhone 6 is flying off the shelves and is not even on store shelves yet. The company notched more than 4 million pre-orders for its new, larger iPhone 6 models in just the first 24 hours. That's a new record and even more than its initial supply. Deliveries will start this Friday at Apple stores and some authorized resellers. But Apple says because of the overwhelming demand, many customers won't receive their new phones until October. While Apple looks to grab a bigger share of the smartphone market, Amazon is aggressively pushing into the lucrative online gaming business. Josh Lipton has more on what Amazon hopes to accomplish.
Amazon's CEO, Jeff Bezos, wants his company to dominate a lot of different industries, from e-commerce to cloud services. He is also very serious about video games.
How do people have so much money?
Amazon recently agreed to pay nearly $1 billion to buy Twitch, a streaming service where fans watch others play video games.
It's so addicting!
Now, the idea of watching others play video games might sound unusual, but it's becoming a very popular form of entertainment. In fact, Twitch is the 4th largest source of U.S. internet traffic, behind only Netflix, Google, and Apple, according to researcher Deepfield. Amazon's executives are clearly excited about Twitch's potential.
They've been growing really fast, obviously, and it's just a fantastic place to go and talk. It's about socializing around games. Over time, we'll be looking for ways that we can work with them to help them move faster in what they want to accomplish.
But it's not just Twitch. Amazon is deploying a lot of capital and resources to the video game industry. The company now runs its own in-house gaming studio, and it's hiring developers to build games for its Fire TV set-top box, smartphones, and tablets. However, not every analyst is convinced Amazon will succeed, given the number of tech titans now battling for market share in this red-hot industry.
At the end of the day, I'm confident they won't win. They face formidable hurdles. You've got really well-capitalized Microsoft out there who is not going to let you take their business away without a fight. You've got less well-capitalized but deeply experienced and successful Sony out there. You've got pretty poorly operated Nintendo out there, but they have $9 or $10 billion on their balance sheet. None of these guys are giving up their market without a fight.
Still, research firm IDC says the video game industry is now worth $91 billion. So even if Bezos controls a small share of that market, it could mean a lot of money for his company and its investors. Josh Lipton, Nightly Business Report, San Francisco.
Shares of Avenir soared to an 8-year high, and that's where we begin tonight's market focus. The company's new drug to help reduce agitation in patients with Alzheimer's delivered positive results in a clinical trial. Based on those results, Avenir's CEO says he plans to meet with regulators.
We have a long path before we can get FDA approval for this product. So our focus right now is to meet with the FDA and other regulatory agencies, understand exactly what it's going to take to make this drug available. Today's really a huge day for patients that have agitation due to Alzheimer's. And so we're focused on how we can make this therapy available for those patients as quickly as possible.
Shares surged 85%, closing at $12.49. Shares of Gilead Sciences went the other way after news surfaced that it's agreed to license a cheaper version of its hepatitis C drug, Sovaldi, to 91 developing countries. Sovaldi hit the market last year. It's been very effective in curing patients with hepatitis C, but the drug costs $1,000 a pill. Shares fell 2.5% to $100.99. Netflix has made its debut in France as it looks to expand in Europe. But according to reports, the video streaming giant is getting a frosty reception as French filmmakers accuse Netflix of avoiding local taxes that subsidize French films. The stock slumped almost 4% to $457.75. And Terex, the construction maker, lowered its full-year profit outlook, citing weakness in the crane business. Its order rate has dropped, especially in developing markets where customers are struggling to secure financing. Shares tumbled almost 6.5% to $32.47. As you mentioned earlier, investors are focused on the Fed meeting this week. Economists, market pros, and other experts have all been debating on what policymakers will decide. But what do CEOs want to hear? And what's their take on the economy and the environment for doing business? Tonight, we hear from Lowe's CEO James Tisch in a new NBR feature, From the C-Suite.
My father was always taught by his mother, you get along with your brother.
James Tisch runs one of the largest family businesses in corporate America. He's CEO of Lowe's, a $15 billion conglomerate headquartered in New York City.
Fall is terrific in New York.
His brother Andrew is co-chairman, and his cousin Jonathan is the other co-chair. Tisch family members control more than 30% of the stock, even though Lowe's is a public company trading on the New York Stock Exchange. Jim's father, Larry, and his uncle, Robert, started the company in the 1940s when they bought one resort hotel in Lakewood, New Jersey, and then kept on adding properties, building up a hotel empire. They expanded into movie theaters, buying the Lowe's chain, the cigarette business through Lorillard, and Bulova watches. Today, Lowe's owns luxury hotels in the U.S. and Canada, insures CNA Financial, natural gas pipelines, and diamond offshore drilling. Tisch says his businesses are growing even though the economy is, quote, lukewarm.
I think the economy is doing reasonably well. For the past 5 years, the economy was growing at 2%. And my sense is that going forward now, for the next year, my fearless forecast is that it's going to grow by 3%. That may not sound like a big difference, but it really is. And I think it'll make a big difference in corporate earnings. I think it'll make a big difference over time about how people feel about the economy. I think it will make some difference.
As you know, the Federal Reserve is meeting this week, and the consensus is that policymakers will start raising interest rates in the middle of next year. How do you feel about that? Are they doing the right thing, and will higher rates help or hurt your businesses?
I think higher rates will help our business. We've had zero interest rate policy now for 5 years. Savers have been unable to earn attractive returns in fixed income securities. And likewise, for certain businesses like ours, where our insurance business has a $45 billion portfolio that's invested primarily in fixed income, we too have been suffering with low interest rates. So from my perspective, they can't go up a minute too soon.
What about your confidence level? As a CEO, are you confident about spending money to expand your businesses or making some acquisitions?
I generally have confidence in the overall economy, but there are certain of our businesses are not experiencing the same growth that the economy is experiencing, so we're just not naturally investing in those businesses at this time.
Mm-hmm. You certainly have a lot of cash at Lowe's. You could be
$5
making
billion.
You could be making a lot of acquisitions. Lowe's history has been growing by acquisitions. Is it that you're not finding the good deals, or something else is worrying you?
One thing I like to say is we don't let the cash burn a hole in our pockets. And while $5 billion is a lot of cash for us to have, I'm perfectly comfortable with it. It's been actually difficult to find businesses to buy. We look very carefully. We kick an awful lot of tires. We've come close on some, but just luck of the draw, we haven't completed one yet.
Mm-hmm. Let's talk a little bit about energy. Recently, you sold one of your big natural gas properties. Are you getting less bullish on energy?
I am bullish on the United States energy renaissance. It's really extraordinary what's happened. With respect to our own investment in the gas exploration and production business, we've decided that now is the time to sell it, that gas prices are up from $2 to $4, that it would take a lot of investment for us to grow the business, and instead we decided that we're going to focus on other things.
What about oil prices? They've been coming way down. Is there a point at which you'd say that maybe we just get out of the oil business too?
We are in the business to stay. We are long-term players. The business is very cyclical. In my mind, the attraction of cyclical businesses is that you can, by leaning against the wind, by leaning against the way things are going, you can really create a lot of value.
What concerns you most as a CEO?
Well, one of the biggest worries I have is what's going on in Washington. The United States has the highest tax rate in the Western world, in the OECD. Our tax rate is 35%. Other countries are 15, 20, and 25%. U.S. businesses cannot compete long-term against competitors who have such lower tax rates. And it's incumbent upon the United States political establishment to do something about it.
A lot of companies are doing these cross-border deals, the so-called inversions. Do you think that that's a good thing?
It's a good thing for the shareholders of those companies, yes. Is it a good thing for America? No. What's the cure for it? Tax reform. It's that simple.
Tish also said that the chances for tax reform this year is 0. Next year, maybe. If not then, it might not happen until after the 2016 presidential election. Coming up on the program, remember Watson, the supercomputer made famous on Jeopardy? It could revolutionize the classroom and change the way kids learn. The first in our series, The Future of Education, is next. The Future of Education. Tonight, we kick off this special 3-part series. In part 1, we look at supercomputers like IBM's Watson, which is able to process information more like a human than a computer. Right now, Watson contains and processes tons of information, including documents, dictionaries, and encyclopedias. That's a lot of information an artificially intelligent tutor could pass on to real-life students. Sharon Epperson has our story.
Meet Watson, the computer that knows pretty much everything.
Watson is really the early stages of a whole new era of computing. Think of it as the ultimate assistant that has time to read everything that's happening and start to put together hypotheses on what might be going on or help you answer questions.
Now imagine having Watson as your personal tutor. That's what education could look like in 25 years. Computers with the power of Watson, but in the form of wearable technology that will inevitably become smaller, cheaper, faster.
So imagine having contact lenses for a 5th grader who has an earpiece which talks to them and gives them audio. This 5th grader can walk down the street, blink into existence a photo of a textbook from the 17th century. They can listen to their tutor, ask them questions about what they're reading. This technologically is quite visible from where we are now.
While artificially intelligent technology will be programmed to teach children, the focus of these tutors will be to learn about their pupils.
They also know the different pathways that learners take through problems. They know when you're learning a times table that the really hard multiplications are 7 and 8. And they know about that. They can anticipate that. And they have a whole battery of questions they can ask you to nudge you further along.
Imagine that for a 5th grader. For Nightly Business Report, I'm Sharon Epperson.
And finally, an unhappy anniversary. Today marks the 6-year anniversary of the collapse of investment firm Lehman Brothers. The bankruptcy sent shivers down Wall Street and was followed by a massive slide in the markets, the housing market crisis, and federal bailouts of some of the country's biggest companies. 6 years later, the markets have repeatedly reached historic highs. The nation's banking system is much healthier. Housing is light years ahead of where it was, and the job market is getting stronger. That's Nightly Business Report for tonight. I'm Susie Garib. Have a great evening, everyone. We'll see you right back here tomorrow night. I'm Susie Garib with a Nightly Business Report news brief. A flurry of mergers this Monday in the healthcare and auto parts businesses. But the biggest deals of the day didn't happen after brewing giant SAB Miller was rejected in a bid to buy Heineken, as it reportedly defends itself against a rumored takeover attempt by Anheuser-Busch InBev. That deal could be worth $120 billion. On Wall Street today, cautious investors wait for tomorrow's start of the Federal Reserve's latest meeting on interest rates. The Dow rose 44 points, the Nasdaq tumbled almost 50 points, and the S&P lost 1 point. And Alibaba is raising the price range of its initial public stock offering to as much as $68 a share. The IPO is expected to be the biggest ever on Wall Street. Be sure to tune into Nightly Business Report right here on your public television station.